Hello, this is our International Financial Management Project. We are Group 6, and the members of our group is Jose Angel Beltran, Mauricio Atkerson, Omar Lopez, and Wang. In this slide, we're going to show the initial shares, price, and number of shares purchased. Our initial investment in each share was $10,000 and we purchased at closing price on January 14th of 2020. For Apple, the price per share in January 14 was 312.68 and shares bought were 31.982. For Cemex, the price per share was 3.82 and the shares bought were 2,617.80. For Virgin Galactic, their price per share was $13.97 and their shares bought were 715.82. For Trip.com, their price per share was 38.5 and the shares bought were 259.75.
U.S. multinational corporation Apple, symbol AAPL. The company was founded by Stephen Paul Jobs, Ronald Gerald Wayne, and Stephen G. Wozniak in 1977 in Cupertino, California. The current CEO is Tim Cook. As of August 24, 2011, Apple's market cap is $1.265 trillion, and Apple designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories worldwide. It also sells various related services from a range of related software, services, accessories, networking solutions, and third-party digital content and applications. Moving along, we see the price per share initially was 312.68. The closing price per share was 276.93, and the initial shares bought were 31.982. The shares value after the closing price per share was 8,856.78. The percent change was 11.43%, decrease in value, with an overall loss of 1,143.22. From week 8 to week 9, we saw the highest decline from a price per share of 277.97 to 229.24. And the following week after, we saw from week 9 to week 10 the highest increase from a price per share of 229.24 to 247.74. Continuing, we will look at Apple versus an S&P 500. Apple represented by the blue, the S&P 500 represented as the red. Looking at the graph below, we can see the coefficient correlation of 0.9, which is a positive correlation between the two. Innovation as the driving force of stock prices gives shareholders the belief in companies' potential/future performance, and thus makes it easier for industrial companies to embrace new technology without investing upfront capital in new systems. Given that, we also looked at S&P 500 as the majority of it is made up from tech companies. If we look into the weights, Apple is the number 2 weight in S&P 500 SPX as of April 2020. Many of the top weight companies in the S&P are technology companies, affected by similar market forces and technical disruptions, and thus explains also why it has such a strong correlation of 0.9. Lastly, we will look at some notable news in relation to the weeks with the highest increases and decreases. From the week of March 9th to March 16th, the 5 most valuable tech companies lost $321.6 billion in value, with Apple accounting for almost one-third of that sum. Majority of this came from the closure of stores for the next 2 weeks in attempts to stop the spread of COVID-19. Apple lost roughly $100 billion in value and saw its shares plunge 7.9%. The following week, from March 16th to March 23rd, the entire U.S. market saw a boost with the opening bell tied to a potential rescue bill for the economy. Apple was up 5% at the time, hovering over $240 a share, putting it back over the $1 trillion market cap mark. Just after the markets opened that morning, we saw the Dow Jones Industrial Average, NASDAQ, and S&P 500 indices, along with Apple and most other stocks, take another hit as the global health pandemic spread. Global smartphone shipments fell 17% annually to reach 275 million units in the first quarter of 2020. Apple was nudged up to 14% share in third spot behind Samsung and Huawei. According to the latest research from Strategy Analytics, this is the smartphone industry's worst quarterly performance of all time. Woody O, director at Strategy Analytics, added Apple iPhone shipments fell a better than expected 9% annually from 43.1 million units worldwide in quarter 1 of 2019 to 39.2 million in quarter 1 of 2020. Apple's global smartphone market share has risen from 13 to 14%. However, in the past year, Apple's new iPhone SE model with lowering pricing and larger presence in emerging markets like India will give volumes to a further bump in the coming months.
Hello, my name is Mauricio Atkerson, and I'll be talking about the U.S. multinational corporation Virgin Galactic. The ticker symbol for Virgin Galactic is SPCE. The headquarters is found in Las Cruces, New Mexico. It was founded in 2004, and the CEO is George Whitesides. Its current market share is $3.756 billion, and a description of the company is that Virgin Galactic is a space travel company under the Virgin Group Company, of which Virgin Galactic is focusing on making spaceflight more of a recreational type of activity for the public to engage in. It would be like going on a luxury cruise, but in space. Now I'm going to talk about Virgin Galactic's historical data. The price per stock was $13.97 on January 14th. The closing price per stock was $19 on April 21st. The amount of shares we were able to buy with the initial $10,000 investment was 715.82 shares. The share's value as of April 21st was $13,600.57. With this, we saw a percentage change of 36.01% increase in stock value from January 14th to April 21st. The overall gain in our share value was $3,600.57. Now we saw that the highest increase in Virgin Galactic stock prices was from week 4 to week 5, from the price per stock of $18.93 to $28.68. The highest decline, however, was on week 6 through week 7, from price per stock value of $33.87 to $24.60. Now I want to talk about graphing Virgin Galactic versus S&P 500. We can see that Virgin Galactic is in red and S&P 500 is in blue. Now I want to note that the correlation was measured in percentage growth as opposed to currency value, as the PPS between Virgin Galactic and S&P 500 are too far apart to make a reasonable measure. Now, I want to bring up the coefficient correlation, which equals 0.629. Thus, we see that there is a strong correlation between both Virgin Galactic and S&P 500. However, we can see on the graph this correlation isn't as present as we might think. The reason is because the price per stock of Virgin Galactic is a bit more volatile than the S&P 500 as a whole. See, as Virgin Galactic is just one company, the S&P 500 is an index of 500 top companies that are listed in the S&P 500. Thus, we can see that the percentage change is more prominent in Virgin Galactic as opposed to the S&P 500. This is also defined in the amount of peaks and the regressions that we see within Virgin Galactic, while when we look at the S&P 500, it's more linear in a presentation. So now, what could have caused these dips and these peaks? So, looking at Virgin Galactic's news, from the week of February 3rd to February 10th, Virgin Galactic started announcing potential space flights to be tested within the coming months, which got investors excited and caused Virgin Galactic's largest increase in stock value from $18.93 to $28.68. Now, what would potentially make their downfall was their announcements of their earnings in quarter 4. So from the week of February 17th to February 24th, Virgin Galactic's earnings were set to be announced, leaving many market investors on their toes for Virgin Galactic's quarter 4 earnings to be promising. However, on February 26th, their earnings fell short of Wall Street's expectations and thus made their stock drop by 15.3%, following their largest increase in price per stock value. Now, many companies had been concerned of the coronavirus and COVID-19's impact on their stock prices. Virgin Galactic was one of these companies initially, but once the coronavirus actually went down in stress levels, it actually went back up and picked back up earlier than most other companies. The reason they said this was that As a company with no commercial product, it is not victim to a huge deflation of stock value, as said by Virgin Galactic's PR division. Now, you can chalk this up to PR talk, but I would like to say that there is some truth in it. Since they don't officially have a product ready for commercial use, there's not really any impact in its stock price or stock value. However, if they were to think about making a manufacturing deal with a factory of some sort, and if they're choosing to outsource, they might not find those companies available, as many companies are shut down throughout the world. Many manufacturing companies are also shut down throughout the world. So they might have to think about how they can get around all of this.
For the foreign MNC, Trip.com. Trip.com Group Limited is a Chinese provider of traveler service including accommodation reservation, transportation ticketing, package tours, and corporate travel management, and is founded in 1999 of Shanghai, China. The company owns and operates Trip.com, Skyscanner, and Ctrip.com, all of which are online travel agents. And the Trip.com is the largest company of online traveling in China. For the Ctrip stock, so I bought the stock at 38.5 US dollar. The share I bought is 259.74 shares, and the closing price at 23.25. The closing shares value is 6,038.96 US dollar. Because of the COVID-19, the stock market has huge impact, and the stock is from 38.5 dropped to 23.25. On the graph, we can see that the coefficient correlation between the Trip.com stock and the Nasdaq has a really high correlation, and the coefficient correlation is equals to 0.4. During this time, many travel agencies may be hit hard, which will have a huge impact on the whole tourism industry. Some large travel agencies and OTA used to sign contract with many domestic and foreign suppliers half a year and a year in advance, including cruise line, room control, and early sign agreements to get tickets in order to control resources and reduce cost. However, if they did not receive orders, the travel agencies themselves would bear huge losses. That's why the Trip.com that's the one of the reason why the Trip.com company, the stock had dropped so much.
Hello, this is Jose Angel Beltran, and in our portfolio, our second foreign multinational company is Cemex. The ticker symbol for Cemex is CX, and they are listed in the New York Stock Exchange. Their headquarters is in San Pedro, Monterrey, Mexico, and it was founded in 1906. Their CEO is Fernando Gonzalez, and Cemex is a Mexican multinational building materials company, and it manufactures and distributes cement, ready-mix, concrete, and aggregates in more than 50 countries. Slide, we're going to show the foreign multinational company Cemex initial price per share and closing price per share. Their initial price per share on January 14 was 3.82, and their closing price per share on April 21st was 1.97. The total shares bought initially were 2,617.80, and at the end, when we sold the stock, the shares value had got down to $5,157.07, and this totaled an overall loss of $4,884.93. So the percentage change, it was a 48% decrease in value for the stock, and the highest increase for this stock happened in week 1, from week 1 to week 2, from 3.82 to 4.14, and then on week 11 to week 12, from 1.75 to 2.12. Looking at their highest decline, it was in week 8 to week 9, and it went down from 3.42 down to 2.71. In this slide, we're going to take a look at a graph of CEMEX against the IPC of Mexico from January 14 to April 21st. CEMEX is on the blue line and the IPC of Mexico is on the purple line. So CEMEX has a strong correlation of 0.88 to Mexico's most important index. The Índice de Precios y Cotizaciones is an index of 35 stocks that trade on the Bolsa Mexicana de Valores. In this slide, we're going to take a look at some notable news that caused stock price fluctuations in CEMEX stock. So in February, CEMEX said that cement volumes in its home Mexican market fell 13%, and it was hurt by market caution at the start of administration of President Lopez Obrador, and also by delays and suspensions of building permits in Mexico City, such as the Mexican airport. In April, in accordance with a decree issued by the Health Ministry of Mexico, CEMEX has temporarily halted production and certain related activities in Mexico until April 30th of 2020. And as a result of COVID-19, the company had also identified $200 million in cost-saving initiatives for this year, which are expected to be fully realized in 2020. CEMEX is also evaluating the delay of certain capital expenditures that had been planned for this year, among other measures. A result of production shutdowns, uncertain timing for construction activity to restart, and low demand due to the impact on the economy and personal disposable income as a result of the COVID-19 crisis also impacted the stock price of CEMEX. Also, JP Morgan downgrades CEMEX to neutral from overweight, saying it could take at least until October to start to see positive signals that could make us more comfortable with this year's expectation and the expected recovery. And investors likely find many other opportunities that could offer an attractive return with greater visibility. To conclude this presentation, we're going to take a look at the portfolio performance. Our starting investment value for the portfolio was $40,000, and our final investment value totaled $33,653.38. This totaled a loss of $6,346.62, and this was a 16% loss in our investment. From February 14 to April 21st, the S&P 500 had a return loss of 14.01%, and our portfolio underperformed the S&P 500 with a return of loss of 16%.